our booming property market. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, and I thought we'd have a look and finish the week with this Domain article talking about Sydney house prices back on the rise. But the unit market remains weaker, so it looks like we're having, well, a K-shaped economy in housing at the very least. Can't say I'm surprised that units are taking the hit. If anything, I'm surprised it hasn't happened earlier, with just the number of construction disasters in the unit sector that we've seen over the last couple of years. So Sydney house prices have rebounded in recent months, jumping more than $100,000 in pockets of the city, new figures have shown. Sydney's median house price increased about $13,300 or 1.2% to $1.15 million over the September quarter, the latest Domain house price report released on Thursday shows. Prices continue to fall for apartments, though, at a slower rate, with the median dropping 0.2 to $732,000. Well, you're talking more investment stock here too. Maybe people are getting out of them. So let's have a look. I'm going to have to update my median house prices. So, Sydney, well, let's look. I'll bring up the other chart I brought in here recently. So this is CoreLogic's data from median house prices to July 2030, and Sydney was 866. And this data that we're looking at here from the Domain house price report is at 1.15 million. Melbourne 875, Brisbane 596, Adelaide 564, Canberra 817, Perth 534, Hobart 555, Darwin 539, and nationally the median is $811,000. Remember everyone, we're in the first recession Australia's had in 28 years. Our unemployment rate is at 6.9%. And, median house prices are still doing pretty solid. But there are a few things that may be keeping that going. One of them is the mortgage holidays. We can't really make any predictions about this market until government intervention's removed. But are they going to remove any? What's going to happen? Will there be more calls for mortgage holidays? When they end, will we have Mortgage Keeper? Will that appear? So, across Greater Sydney, the market rebound was sharpest for houses on the lower North Shore, with the median increasing by 130,000 or 5.2% to 2.63 million. Annually, prices have risen 12.5%. That's just crazy how high these prices are going, or how fast they're rising. House prices in the inner city and eastern suburbs climbed 120,000 in the space of 3 months to record a median of 2.55 million. Annually, they're up a whopping 14.1%. Domain senior research analyst Nicola Powell said Sydney house prices had regained more than half of the 22,000 in value lost over the June quarter, but noted the pace of price growth was 4 times lower than they'd seen the same time last year, when Sydney was rebounding from the previous market downturn. While buyer activity is strong in some pockets, Dr. Powell said, Sydney's property market was not out of the woods yet. Well, can any market be out of the woods while we still have all this intervention in the economy? Or is it just accepted that, there'll be a complete, media articles and pieces written and just calls for more intervention when the time for all these expiries comes up? Oh, we can't have mortgage holidays. The poor people, they'll put their faces up on the articles and they'll just keep chucking more property. How far do you think our government would go to keep the property bubble going? What do you think they would do to stop the property bubble from pricking, the bubble from bursting? Do you think it's even possible that they can stop it? Or how far down the road can they kick the can? And how dangerous is the consequences of doing that? Here we go, unit prices. So Sydney still we'll look at year on year, 4.3 up. Melbourne 2.8. Oh, Brisbane, we're down 6.1%. Well, see, this is the thing as well with units. There's a flood of units. the market has been saturated with units. I was just at South Brisbane today, and there's so many units everywhere. And half of them looks like there's no activity in them, no life, no people. You mentally see people living in these things. Adelaide, 4.8%. Canberra down 2.6%. Perth down 4.5%. Hobart down 1.5%. And Darwin up 7.8%, unless you're buying a penthouse apartment in Darwin that's leaking, like that poor chap did in the other video we looked at. Year-on-year changes, 2.2%. She said the market still faced risks of home loan holidays and government support packages coming to an end. So see, this is the thing. The market isn't being allowed to adjust. It's not being allowed to reach a natural level. They want everyone just to jump into property. Everyone's invested into it. Big portion of our wealth in Australia is in the property sector. A huge portion of it. And one could argue, you get a nice, docile, compliant, behaving population if they've got a debt anchor around them, perhaps. A house. Maybe I'm getting too paranoid there. Well, there is currently no evidence of an increase in distressed selling. Well, it should be an increase in the number of people that are on mortgage keeper. But then again, yeah, mortgage keeper. It doesn't even exist yet. I'm talking about. See how? Wow. Oh, do you think they'll come up? Do you think we'll hear mortgage keeper, guys? Let me know in the comments. I'm gonna have a shot of coffee on that one. While there's currently no evidence of an increase in distressed selling, the risks increase once financial support is removed, she said. Her sentiment was echoed by EY Oceania chief economist Joe Masters, who expected unemployment to rise and household incomes to come under pressure as JobKeeper and JobSeeker continue to be wound back and more mortgage deferrals come to an end. The housing market has been more resilient than you would expect in the face of such a weak economy. We have a weak economy, but in every other recession, we've never had this level of intervention. Now, for those of you that are old enough to remember the recession that Australia had to have, I was still quite young. But did they have mortgage holidays then? Were they giving out mortgage holidays? Did they have JobKeeper? Did they instantly double the dole? But I think we need to be very careful of extrapolating that positive trend, she said. See, this is the thing. Are we looking at, market correction, dead cat bounce going down? And is this dead cat bounce juiced up by the government stimulus and support measures that are unnatural in the economy? I think how much money they're throwing at housing now to lift it up, to get people buying in. Those 5% mortgages. And then if we get interest rate cuts again, that could increase the borrowing capacity of people even more. And what does that do? Well, it drives up the price. I think she's right. We can't really claim anything here or trust any of this until these support mechanisms are removed. Now, there's a price to all of these support mechanisms. We're going to pay for it one way or another. You don't get anything for free, everyone. Nothing comes for free. You always pay for it. You can't magic production out of thin air. You're borrowing from the future, essentially. So we'll pay for it one way or another. And do we want future generations to be burdened with debt to prop up a housing bubble that's stuffing all the young people up? Dr. Powell said, while house prices were about 43,500 below the mid-2017 market peak, unit values were now 56,000 below their peak and would continue to show weakness because the apartment market had been hit harder by the pullback in investors, reduced overseas demand, and changes in housing preferences post-lockdown. Dr. Powell said house prices reached record highs in the Blue Mountains and on the Central Coast, which she attributed to increased buyer interest in sea and tree change destinations off the back of the rise in remote work. She added that the rest of New South Wales outperformed Sydney, with median property prices outside of the state capital climbing 2.7%. Among those looking to leave Sydney is Randwick seller Judy Sampson, who put her 4-bedroom home up for auction with a guide of $2.8 to $3 million, when the rise of remote working prompted her and her partner to bring forward their sea change plans. I've been to a few auctions, on the Central Coast. It's so crazy out there right now. There's lots of people. It's like an eastern suburb auction, she said. Ms. Sampson has no hesitation about selling her own recently renovated home in the current market. It's extremely strong in Randwick. I've been watching property be listed and sold before auction pretty much continuously. It seems like there's a lot of buyers out there. Selling agent Charlie Beaumont of PPD Real Estate said houses were in strong demand due to a shortage of stock, but demand for units in the region for which the median dropped 5% over the quarter was softer. The housing market is probably closest to the strongest I've ever seen, Mr. Beaumont said. Buyers have been sitting on their hands, and now that it's getting towards the end of the year and we're coming back to some sort of normalcy, a lot more people want to jump into the market. It was a similar story on the lower North Shore, where the house price median has regained the losses seen in the previous quarter. The market has rebounded well here on lower North Shore over the past 4 months, said Matthew Smine of Bell Property Neutral Bay. A lot of that is due to reviewed positivity and general community confidence, but also a big factor has been that there's been less stock on the market. I mean, here, look at the unit prices, guys. Central Coast up 24.4%. I mean, research by Moody's rating agency released on Tuesday found mortgage delinquency rates in New South Wales had risen to their highest level in 7 years by May. This would continue to rise over next year. Well, see, this is the thing. But they're not counting any of the people who are on mortgage holidays as delinquent. We had a look at that from some of the documents coming from the regulators. They're not counted. They don't have to be counted as delinquent. So we can ignore all of them. How much worse will it be when the mortgage holidays disappear and then you have a sudden jump of people that can't pay? So it's all hope is that within the next 6 months' time, the economy will start chugging again. Now, sure, what if Australia's all doing good, but our international borders, when's the discussion of opening that? How much business is dependent on tourism? How much business is... Well, no, I'll show you how much business is dependent on tourism. We can bring it up right here. $60.8 billion of our GDP is dependent on tourism. And remember, the construction hit, or construction boost that we're getting, I'll bring up this other chart. See here, this is showing building approvals. The blue line at the top, see that spike? That's because of the government incentives to encourage construction work. Now, the problem is, those are future projects that have been pulled forward. So what happens when those people that would have used those projects next year, or maybe later in the year, when it approaches that time and there's no one wanting to do the work? There's no projects. Construction could fall off a cliff then, as well, particularly in the housing. Ms. Masters noted that the proposed easing of lending standards, an expected interest rate cut, and lower prices could continue to support strong first home buyer activity in the months ahead, but said elevated job insecurity and lower population growth would have a bigger impact on the market. NAB economist Alan Oster agreed, saying poor population growth and unemployment weren't going away anytime soon. That's the thing, that's immigration. More than half of our population growth has been driven by immigration in the last few years, everyone. Let's see if that chart is... No, I can't bring it up. The link's broken. We would not expect Sydney house prices to go up from here. Certainly low interest rates are still helping, and the RBA is probably going to help with cuts next week. But it's not as though credit has been expensive. The demand for credit is just not there. Mr. Oster said the supply shortage had allowed the market to hold up better than expected, but still thought prices would fall by the best part of 10%, particularly in Sydney and Melbourne CBDs. So if you're buying a place for $3 million, $2 million, $1 million, you take a 10% hit next year, would you be happy? We're not walking away from our view that house prices are more likely to go down than up, he said. So there we have it, everyone. I think we're not really going to see the true state of this market until next year. But as we've seen, this government at a federal level is willing, and all the state governments are willing, to do whatever they can to perpetuate this housing bubble. And the problem is, the more incentives you do to encourage people to invest in housing, It disincentivizes people from investing other parts of the economy and results in a lowering of our economic complexity. This is why everything's manufactured overseas, everyone. This is why it's easier for people to just jump into businesses. To jump into houses and flip them one after the other and just snowball it rather than start a business. Is that good for our country? Let me know what you think in the comments down below. Please like, share, or subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time.